that are transnational don't give a fuck about the little.
But inflation's coming down significantly and very fast.
What are the charts saying? The charts are still saying downside.
Charles Hoskinson speaks against the Great Reset and Wall Street. Raoul Pal believes we have already seen the bottom in the crypto markets. Garrett Soloway has a different theory and believes Bitcoin will go under 10K. Who do you agree with? This is the State of Crypto. Subscribe for great content and hit the like button.
Last 2 years, we saw the greatest wealth transfer in human history from the poor to the rich. And now the rich are admitting that maybe all the things that they did over the last 2 years were not necessary, but they don't give the money back, the property back. You see, the Great Reset, Davos, this year I was going to go out of disgust. I'm just not going to do it anymore. Because what are they doing? They're saying you'll own nothing and be happy. All the farmland is going to be owned by the rich people and the big companies, multinational companies, international funds. All of the supply chains run by a small group of hyper-consolidated entities that are transnational. Don't give a fuck about the little person. The retail side, people are opting out. Problem is there's less money on the retail side now than on the institutional side. If you look at the selling rates of crypto, what's happened over the last 6 months is institutions have been dumping their crypto. Some, like Saylor and others, are holding on and doing everything in their power to go Team Orange. But most are looking at it as a high-risk, high-return asset. And in times of recession, reallocate your portfolio. This was always the danger of inviting the Wall Street types in, is that they would just simply treat crypto like any other asset and label it as an exotic high-risk one. And when the markets go in not the direction they want, they dump it. The retail people are holding because they are opting out of a global system that's unfair, a global system that's frankly rigged. Seen it myself. I've been in the meetings. I've talked to the people everywhere I go. They don't give a fuck about sustainability. They don't care at all in any way, shape, or form about whether you live well. Your standard of living is the same as the standard of living of your parents, your grandparents, your great-grandparents. In fact, quite the opposite. They're trying to prepare the masses to accept a standard of living significantly less than the one that they inherited, the one that they grew up with, the one that their parents grew up with. This is no way to run the world. This is no way to live well. It's because they broke the world money system. And the entire point of cryptocurrencies are to restore some trust, credibility, and stability into the world money system. That's the entire point of the labors of this industry, the research that we do, the reason why we keep picking up shovels and fighting the good fight. Now, there's tons of experiments. Maybe fractional reserve things are not a good idea. Go figure. We've learned this again and again and again from private monies in the 19th century, and again and again and again from our banking system. And now the market is again learning the same lessons of before, only this time is pushed by the arrogance of youth as opposed to by a malicious cabal. Maybe it's a good idea to follow deflationary monetary policy, full or over reserve, if one's desires to create stability.
Well, I just told you that asset markets are actually pricing in a full recession. And I know there's a narrative out there that the markets need to price in a lower leg from earnings. But when I look at it in my terms using the business cycle, I think it's already priced lower earnings. So if bond yields start to fall, then financial conditions are easing. And the chances are the growthier end of the world, NASDAQ, crypto, growth technology plays will start outperforming. And we've seen many of those bottom a while ago when bond yields topped. Now, we need to see that play out. Tomorrow, day after tomorrow, is the ISM survey. I'm expecting it to be weaker than expected, but it could play out the following month. Economic data, 1 month to the next isn't a lot of data series or wiggle room. So let's see what happens. But the next couple of months, I'm expecting it to be signaling a full recession. and we'll get to the tipping point where bond yields start to fall. It'll start affecting asset markets. So I'm not a believer we go to new lows. I've done surveys after survey and seen all the surveys on Twitter. 70% of all respondents in crypto and macro think equities go to new lows. Now, if that is the case, then most people are positioned for it. So therefore, the path of pain is the opposite. And I think the market's priced that in. So I think there's no certainties in this world. I can be wrong. But my view, the balance of probabilities are for me that the risk asset markets, equities, crypto, have bottomed. We are having a retest. And as the economic data shifts and bond yields come down, that'll drive that further, and it'll be a further hated rally because nobody will understand. We're going into recession. Why are equities going up? Well, because they already priced the recession. It's their job to be forward-looking indicators. So that's kind of the big picture framework. If I can see the turn in the data already in liquidity conditions in February or March of next year, the market can too, even though most participants can't, which is why the market always confuses people. The market generally bottoms before a recession. It's normally 3 to 6 months. Sometimes it's been a year beforehand. Other times it's been in line with the economy. So my guess is the market has seen the low and it lies ahead. I short sharp recession. And therefore the market is already looking through, which is why the Eurodollar market's trying to price the turn of when the Fed have to start easing.
I'm still in the camp that Bitcoin's got more downside. Again, whether it's 12, 13, whether it's 10, whether it's 15, we'll see. But I'd be hard pressed considering the situation with the Fed, with the inflation. You know, this is that first cycle, the first bear market cycle for Bitcoin where the Fed has not been printing money. And I think you have to take that into account and say, well, why would this cycle be less downside than past cycles, which are been 80 to 85%? So to me, it makes me even a little nervous, like it could go lower than 12, 13, which would be 80 to 85%. So hopefully that doesn't come to fruition. I'm going to start accumulating, continue accumulating in the teens and the low teens, even down below. But I would love to see a bottom sooner than later. But I got to just say to myself, what are the charts saying? The charts are still saying downside.